Someone asked us earlier today, who designed David Downs? We said we did it internally. We didn't get an ad agency to do it. We did it. It's what we do. The redesign of the NWJ New Look store, it's what we did. So, we think that we've got great challenger brands. And we're comfortable with the fact that they're in diverse categories. Not everyone else is, but we've given up trying to convince everybody, to be honest. We're certainly comfortable that they're in diverse categories. They're led by entrepreneurial people. At NWJ, we've extended Hilton's contract by another year to the end of August next year. So he's going to support Duncan, the newly appointed CEO, at the beginning of this year, as well as focus very much on the merchandising within the concession businesses, particularly. By many, Hilton's regarded as one of the top 5 merchandisers in the country. On the food side, we've got Christo Carlo leading that. I often joke and I say, Christo sold Wimpy to famous brands. He should have sold it to us. But Christo is heading up the food division, so we're excited about that. These are entrepreneurial people that are driving these businesses, senior people. And we're all incentivized on group growth. Incentive the entire ExCo, which is 11 people, incentivized on headline earnings per share growth. We believe that we've got strong levers. We've got 2 potential step change levers in terms of the integration of the food division, the concession opportunities in NWJ, and then we've still got the organic growth of, we're probably going to grow about 5 NWJ stores this year. We've actually opened 3 of them already this year. We plan on 5. And we'll probably add a net same amount of food stores as last year, probably between sort of 13 and 15 new food stores during the course of the current year. If you take where our current growth is in terms of sales, that we're seeing positive sales growth in scooters, positive sales growth in NWJ, we definitely think that we've got some good growth levers. We're also starting to get to a critical mass where we can start to capitalize on margin improvement, which starts to make an appreciable difference to the bottom line in terms of rands that fall down. And certainly our ability within the divisions to start to get some synergies is real. I mean, this year we on an annualized basis going to save just a little north of R500,000 just in combined IT costs that we have. And we're already doing it with marketing. Part of what's been driving the marketing growth in NWJ is simply that we buy all our media centrally. It's nothing else really in terms of the media spend. We certainly believe that they're underpinned by good quality earnings. The improvement in that cash conversion ratio that everyone was talking about, which for us is quite a key measure, has been getting better and better. And the fact that we've closed stores is a good thing in terms of the quality of earnings. So what we're seeing that as a percentage of system sales, our royalties are getting better because there's less stores on royalty breaks. And we definitely believe that the notion of having a good record of good governance is important. I think that talking to potential investors, the things that have happened on the Altex are not good, certainly for Altex companies, and we do run the risk of being painted by the same brush. But we do think that we've got good governance, and we do believe that we have a track record. The individuals that are running the business have got track records, and certainly Taste has been around for 10 years. We've only been listed for 4, but we've been around for 10 years. So certainly in terms of a future runway for growth, we certainly believe that we have. And I think that's really what where part of our proposition is. It's not about whether we are jewelry or are we food or are we confused. That's certainly not how we think of it. Before I thank you, there is one last point actually. There is one other reason. And that's not a lotto number because it's actually missing one. But those are the PEs of some of our peers. And I think that even if we trade at a 50% discount to them, we're currently at about 5. You'd still, as someone told me the other day, the sellers would probably still be paying donations tax on the shares they sold in Taste. So I think that there's still substantial runway from a rating perspective that there will still be value in the Taste share. We accept that it'll be time, but I suppose it's something applied to some of our competitors 5 years ago. So ladies and gentlemen, before I get on some questions, they always like to end off with a bit of a quote. This quote, interestingly, I dug up, was on the front page of our very first business plan in Scooters Pizza in March 2000.